Can I be completely honest with you? When a figure like Buffett makes a move, it not only impacts the markets but also sends ripples through our investment strategies. His most recent purchase. It's not just another stock or a predictable move into familiar territory. No, this time, it's something that might just redefine the playing field. But here's a word of caution. Understanding Buffett's moves is more than just financial gossip. It's a roadmap to potential wealth for those who pay attention. In just a moment, I'll unveil the surprising twist in his investment saga, explaining why it's crucial and what it might mean for the broader market. We'll dissect why Buffett might be steering his ship in this new direction and how savvy investors could potentially sail along with him. Warren Buffett's investment moves are scrutinized and followed not just because he's one of the world's wealthiest individuals, but because his strategies have consistently outperformed the market over decades. The relevance of his moves goes beyond individual gains. They serve as a barometer for broader economic trends and investment strategies. Why Buffett's moves matter. Indicator of market trends. Buffett's investment choices often reflect his predictions about future economic conditions and market trends. When Buffett invests heavily in a sector, it's seen as a sign of stability or growth potential. Conversely, his divestments might signal overvaluation or impending downturns. Influence on markets and stocks. Buffett's decisions can directly influence market movements. His purchase of stocks can lead to increased investor confidence in those stocks or sectors, often resulting in price increases. The opposite is true when he sells off holdings. It can trigger sales by other investors who follow his lead. Educational value for investors. Buffett's strategies, particularly his focus on long-term value investing rather than short-term gains, serve as educational benchmarks for individual investors and investment professionals alike. His methodical approach to investing based on company fundamentals rather than market speculation teaches discipline and research-oriented investing. Buffett's strategic moves. Buffett's recent investment choices highlight a strategic shift toward sectors that might be undervalued by the broader market but have strong fundamentals and growth potential. His decision to sell off significant portions of Berkshire Hathaway's holdings in high-flying stocks like Apple and Bank of America suggests a strategic reallocation of resources towards more stable, value-oriented assets. This could be interpreted as a move to cash in on high valuations before a market correction or to reduce exposure in what he perceives as potentially overvalued markets. The impact on investors and markets. Shifts in investor sentiment. His actions can lead to significant shifts in investor sentiment, affecting how individuals and funds allocate their investments. For example, his recent investments in sectors like energy and utilities might encourage a similar pivot among other investors looking for stable returns in what are traditionally seen as defensive sectors. Corporate governance and ethics. Buffett is known for investing in companies with strong governance structures and ethical business practices, influencing standards and expectations within the investment community. This focus has encouraged more companies to adopt better practices to attract investment from value-oriented investors. Economic signaling. By shifting investments to sectors like energy and away from technology, Buffett may be signaling his belief in the potential for these sectors to outperform in the coming years. This reallocation could be seen as a response to current market valuations and an anticipation of future economic shifts. Warren Buffett and Berkshire Hathaway have continued their tradition of making strategic investments that balance growth with stability. Here's a closer look at their latest significant moves. Occidental Petroleum. Increasing stake significantly, Berkshire Hathaway has bought additional shares, pushing its ownership to about 28% of the company. This represents a substantial commitment to the energy sector, with the investment now amounting to over $13 billion. HP Incorporation. Berkshire Hathaway has acquired a significant stake in this technology company, known for its printing and PC businesses, signaling a new interest in the tech hardware space. Chevron. Another major investment in energy, Berkshire has upped its stake in Chevron, making it one of the substantial holdings in its portfolio. The recent investments highlight a clear focus on energy. The increased stakes in Occidental Petroleum and Chevron point to a bullish outlook on the energy sector, possibly due to expectations of rising global energy demand and an extended period of higher oil prices. Technology. The investment in HP Incorporation suggests an interest in stable, established technology firms that offer both growth potential and substantial dividends. Occidental Petroleum. The investment here is now one of the largest single holdings in Berkshire's portfolio, emphasizing Buffett's confidence in the energy sector's long-term value. HP Incorporation. The stake in HP represents a significant diversification, adding a robust technology layer to Berkshire's traditionally industrially heavy investment portfolio. Chevron. With increased investment in Chevron, Berkshire Hathaway is significantly exposed to the cyclical nature of the energy markets, betting on long-term growth. Let's break it down. Occidental Petroleum. Occidental Petroleum is an international oil and gas exploration and production company with significant operations in the United States, the Middle East, and Latin America. Reason for investment. Buffett's investment in Occidental Petroleum could be driven by its attractive valuation metrics, strong cash flow generation capabilities, and strategic assets in lucrative oil regions. Economic impact. This significant investment by Buffett could signal confidence in the oil and gas sector's recovery, potentially stabilizing and positively impacting the sector's market conditions. HP Incorporation. HP Incorporation is a global leader in printing and personal computing devices. The company has a strong track record of innovation and a solid financial foundation. Reason for investment. Buffett may be attracted to HP due to its steady cash flow, low debt levels, and potential for growth in the evolving tech landscape, particularly in areas like 3D printing and digital transformation solutions. Economic impact. Berkshire's investment might boost investor confidence in the tech sector, particularly in more traditional firms poised to benefit from new technology trends without the valuation excesses seen in newer tech startups. Chevron. Chevron is one of the world's leading integrated energy companies, involved in every aspect of the oil and gas industry, including exploration, production, refining, and marketing. Reason for investment. The investment in Chevron likely reflects Buffett's assessment of the energy sector's potential for sustained profitability and growth amid global economic recovery and increased energy demand. Economic impact. By increasing Berkshire's stake in Chevron, Buffett could be seen as endorsing the energy sector's stability and its importance in the global economy, possibly influencing other investors to reconsider the sector amid renewable energy transitions. Warren Buffett's investment strategies are closely monitored and analyzed not just for the specific stocks he picks, but for what they reveal about his broader investment philosophy. This philosophy has been shaped by a commitment to value investing, a focus on long-term growth rather than short-term earnings, and a keen eye for companies with robust business models. Buffett's approach to investing is famously centered around value investing. This strategy involves identifying companies that are undervalued by the market but have strong fundamentals and excellent long-term prospects. He looks for sustainable competitive advantages, often referred to as economic moats, like brand strength, regulatory barriers, cost advantages, or unique technologies. Strong management teams that are both capable and honest. Attractive pricing, ensuring that the price paid for the stock provides a substantial margin of safety relative to the intrinsic value perceived. This philosophy is evident in his recent moves. For instance, his increased investment in Occidental Petroleum and Chevron reflects a bet on the intrinsic value of these companies that he believes the market has not fully appreciated, especially given the current global energy demands and future prospects as the world still heavily depends on fossil fuels. Similarly, investing in HP Incorporation suggests a belief in the enduring value of established technology firms that maintain strong cash flows and dividend payments. Market reactions. The market typically reacts positively to Buffett's investments, seeing them as a vote of confidence in the company's futures. When Berkshire Hathaway increases its stake in a company, it's common to see the stock price of that company rise as other investors rush to follow his lead, hoping to capitalize on the Buffett effect. This reaction underscores the weight his endorsement carries in the investment community. Occidental Petroleum shares, for example, saw a significant uptick following Buffett's increased investment, reinforcing the market's confidence in the energy sector amidst fluctuating oil prices. HP Incorporation experienced a boost in its stock valuation, as investors perceived Buffett's investment as a sign of stability and potential growth in the tech sector beyond the flashy startups and high volatility associated with tech giants. Implications for individual investors. Individual investors can draw several key lessons from Buffett's recent investment decisions. Diversification. While Buffett maintains a concentrated portfolio, he ensures it is diversified across different sectors. His recent investments spread across energy and technology illustrate a balanced approach to risk management. Research and fundamentals. Buffett's strategies emphasize the importance of deep research and understanding of a company's fundamentals before investing. Investors should look beyond market trends and consider the underlying business performance and sector dynamics. Patience. Perhaps one of the most critical lessons from Buffett is the value of patience. His long-term holding strategy allows investments to realize their potential over time, often regardless of the market's short-term fluctuations. Risk management. Buffett's cautious approach to selling overvalued assets to reallocate resources elsewhere demonstrates an acute sense of risk management that individual investors can emulate. This involves knowing when to exit positions when the initial reasons for investment no longer hold true. Alright, let's wrap this up and bring everything we've discussed into focus. Warren Buffett, the sage of Omaha, isn't just making random plays. He's always strategizing for the long term. He sells high, buys low, and always with an eye on robust fundamentals and undervalued gems. For us regular investors, it's about learning from his prudence and patience. Remember, it's not just about jumping on or off the bandwagon. It's about understanding why certain assets are valuable and when they're not. I want to hear from you now. What do you think about Buffett's recent shifts in his portfolio? Are you considering adjusting your investments based on market trends, or do you have a long game plan like Buffett? Drop your thoughts and strategies in the comments below. Let's get a robust discussion going. And if you found today's breakdown helpful, smash that like button and subscribe if you haven't already. Hit the bell icon so you won't miss out on any of our future analyses. Your support helps us bring more such insights directly to you.